Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today's December 2nd, 2020, and today is Wednesday morning. So looking at the highlights of the day, the Nasdaq back on its all-time highs, while the euro breaks resistance yesterday after giving us a fake out. But first, looking at the economic events of the day, just one event happening today. Fed Chairman Powell continues to testify in front of Congress, and that's going to be happening from 5 o'clock South African time. So that's an important event. Now, looking at the various markets, starting out with the Forex symbols, the euro fakes and breaks out at resistance at 120.70, finally breaking that 120 level. Now, the Nasdaq leads the market higher in terms of the indices, really fueled by Apple. We're going to take a look at that in just a second. In terms of the commodities, gold rallies back above 1,800 while oil is unchanged. And looking at the stocks, Apple extends its rally all the way up to 120. And lastly, looking at Bitcoin, it falters at that $20,000 per Bitcoin resistance, multi-year resistance level, and doesn't break higher. So let's take a look at the markets and see what we can expect from today's trading. So we could say a fake out, breakout, and then finally a breakout. Look at this, okay? 120.70-ish level right now. Looking at the euro, we challenged it once, twice, and then we just really just hovered around it. And you could see the consolidation towards the resistance-ish level, and then finally breaking above it to 120.72. Now, this is really very monumental because if we look at this, okay, on a yearly time frame, we haven't been in this area since 2018, which was quite some time after the euro had a second run to 125-ish level. And this is really on the back of that we haven't been in this type of area. If we only look at a monthly chart since 2011-ish area. Okay, look at that. Okay, so this is how momentous this is. Now, there's a significant resistance at 125, so just be aware of it. But this could be the impetus of a start that may bring us back to the 130-ish level for the euro, which is good news for the European Union. Now, looking at the GBP USD also, took us up to 134, but not breaking higher. If we look at the Aussie dollar as well, it's on those highs, but not breaking out higher. So the euro changing character and getting stronger versus the USD vis-a-vis all the other pairs. So we have to reassert ourselves now, because if the euro is taking us higher against the dollar, it means that the euro now is becoming a leading indicator as opposed to a lagging one. Now, looking at gold, a big move upwards yesterday. Let's take a look at that. Up from 1,760-ish level above this 1,800-ish level at 118.12. Now, in terms of this, there's a resistance here at this 112-ish level, okay, 120, 112-ish level. So just be aware of it. This may be just a short covering, okay, as this has gotten beaten up since, the inception of the election results back in November, the beginning of November, that is. Okay, now looking at, I'm not going to cover the oil because it's really unchanged, but looking at the Nasdaq, okay, we're looking at a daily chart of the Nasdaq. This is really important that we're looking at a daily chart of the Nasdaq, and we're back at our all-time highs at 12,400-ish level. We haven't hit this high since the end of August. Now, with this said, okay, if it does break above it, this is really momentous because this means we could rally towards the end of the year. Now, what is taking us higher? Okay, looking at the individual stocks, if we look at Apple, look at that. It's a takeoff, right? It's going to out of orbit, okay, from 110 up to 120. Now, Apple's not a small stock to move like that, okay? For this stock to move 10 points, it's quite momentous. Okay, so with that said, we're seeing that it is consolidating towards the upper level. You can't see it on a longer time frame, but ultimately, we're back in this, pre-split. We're somewhere back in this 427-ish level after selling off to 370-ish level. Okay, so this is a pretty decent correction for Apple. Now, looking at Facebook, also finally breaking above that 273. Very, very difficult to break above that 273, but finally did it, and you could see we gapped up when we went. Now, I'd like to see some continuation, okay, because the only way that this is going to sustain itself over the long run is that if it continues going higher. Okay, now looking at Microsoft dead here, not breaking out higher, okay, which is an indication maybe that it's not happening systemically. But as we've seen most recently, we've had rotations of the market. First it's Apple, then it's Amazon, and then it's Microsoft. Today may be that day for Microsoft to actually go, which is normal. Okay, the markets make rotations. If we look at Amazon, we also went up here to 3,200, reluctantly breaking that 31-ish level. Very reluctant, very difficult to break above that 31 level, and finally did it. But we were retracing at that second resistance-ish level. As you could see yesterday, we hit it, but couldn't break above it. Now, lastly, I want to cover Bitcoin because I think that this has really been the one that has given us some tremendous character and some tremendous opportunities. Now, yesterday we hit that 20,000 or close to that 20,000, really teasing us at that level, but faltered right afterwards and then couldn't sustain it and then broke further down. So looking at a weekly chart, that's it. That's the weekly chart. We're right there. However, just like the Euro chart, if this consolidates closer to its resistance level and continues to hover around here, this may actually follow through. Might not happen today, might not happen tomorrow, but this may still follow through. Okay, we still have some time going into the end of the year. We are December 2nd, so we've got some time until the end of the year because that's generally how we roll. Okay, we roll into the end of the year. We actually roar into the end of the year. It's generally a bullish time period for the U.S. markets. Now, especially if we get that stimulus package, a lot of the market is based on sentiment. Okay, and with that said, if it's based a lot on sentiment, if there's some positive sentiment, especially as the vaccine starts rolling out the beginning of January, we should see ourselves, seeing a further correction in the market and getting back to somewhat, I don't want to say normal, but somewhat of a clear picture as to when this pandemic can actually be past us. This is Fred Razak. I want to wish you guys a great trading day. Thank you.